day, folks, and I will be reviewing the charts of Friday, 23 February 2024. As yesterday, the market has rallied higher and it swept the high of 16 February 2024. And I'm expecting the markets to, because the Thursday the market has not take out the buy side liquidity in 12 February. So I would expect the markets to rally higher to take out the buy side liquidity. And right now, I'm going to Forex Factory to show you the news. Well, in Friday, February 23, there's no any news. So let's go back to the charts. Now I will go into 1 hour charts. In 1 hour charts, the market has swept the 22 February at 16 p.m. New York time. In 4 a.m. New York time, the market has swept the sell side liquidity. For Friday, I am expecting longs, and I will explain why I took a loss in Friday. In Friday, I took a loss is because that there is equal highs above, and I would want the market to sweep the equal high before it goes short. Let's go into 15-minute charts. In 15-minute charts, the market has rallied higher during the London sessions, and it keeps going higher and higher until it sweeps the buy side liquidity at 9:15 a.m. So if in that day if the market has swept the buy side liquidity, I would go short instead. Well, I know that the market has swept the 9:50 a.m. Sweep the buy side liquidity, and I would go short during that time. But why did I end up taking a loss? Now I will go to 5-minute chart. Before I go into 1-minute chart, I will show 5-minute charts, 3 minutes first, before I go into 1-minute charts. In 5-minute chart, during 9:30 a.m. equity opening time, there is a bullish fair value gap at 9:15 and an order block of 9:10. This is an order block. And I'm expecting the markets to go back into this fair value gap and it continue go long. But why am I framing long? I have already said that if the market has take out the buy stop during the time, I would go short instead. Now I will go to 1-minute charts. So in 1-minute charts, in 9:30 to 9:46, there is 2 equal highs in smart money. I do not like this equal high in trading. If there is equal highs, the market will want, this is a very easy target for the markets to target on this buy side liquidity. And if the market is equal high, there is no market structure shift of bearish market structure shift. If the market would want to go bearish, I would wish that there is a bearish market shift, which the buy side liquidity is swept and it creates a displacement lower, and while it also creates a fair value gaps. But in this case, in today Friday, there is an equal high. So in my mindset that if the market wants to go long first to take out the buy stops before it runs lower. At the time, I am taking the trade here, the bullish fair value gap, and I'm expecting the markets to go and sweep the buy stops. The market has taken out the sell side liquidity, sell stops, and it break and it creates a market structure shift, and this is the bullish market, and I enter the longs here, and I'm expecting the markets to take out the buy stop, and the market does not go into my direction. In the end, I took the loss. So today in this journal, I want to tell you that in Friday, I know that the market would be long or short, depend. It needs to based on the time, which based on the silver time or the New York AM sessions. The daily bias is very important for traders to frame longs and short, and it also have a confluence of time. Based on the time, you need to do, or what do you need to change your direction, or you need to change your strategies during the time. If the market doesn't show the direction, you need to be more flexible on it. While when the market has take my loss out, means that the market does not want to go longs. And what I just mentioned is about in daily, the market has swept the buy side liquidity, so the market would want to remain bearish, and it want to sweep the sell side liquidity below here, the London session low. And I did not take any trades. Instead, I went to sleep because that time is already 11:30 p.m. in Malaysia time. So I would direct go sleep. I know that there's a setup in 10:50, but I did not trade. So I want to show you the market structure shift during 10:50. Why this is an ideal entry for you to go short. If the market doesn't want to go long, you have to change your direction to go short. And why would I be, after that, I would be looking at this fair market or the execution you should trade on, is because the market has swept the buy side liquidity, and it creates a market structure shift or displacement, bearish displacement lower, and it sweeps the swing low here, and it also sweep the low of 10:30. It means that the market is showing bearish, while it also stay in the order blocks, the up close candle, the green candle. This is an order block, and it stay in the order blocks, and it creates low. So there is a bearish fair gaps. You can trade in 10:50 to 11:10, the macro time. Your target would be the low of the London session, 4:27 a.m. New York time. The target will be the sell stops, and the market has reached the sell stop during 11:02. You would get a profit during that time. In this journal, I have taught you that if the market has not and does not want to go into a direction, you should change your strategies to go short. This is the experience that I learned during this 1 year. You need to see what does the market does during the time. You trade based on time, and you need to be flexible if the market has shown you this sign. And today will be the journal for the Friday 23 February 2024, and I will talk to you later. Take care.